What's up guys, welcome back to another video, and in this video we're going to be talking about the stocks that I picked up this week. You know, there were some great opportunities in the market during this red week and the sell-offs that occurred, so I just want to show you guys what I picked up and why I picked them up. But before we get into it, if you don't mind just dropping a like and hitting subscribe, it really helps out the channel a ton. And we are doing a giveaway with Peak Sportswear when I hit 6,000 subscribers, so make sure you're just liking and dropping a comment on every video. And also check out the links in the description. I have a Robinhood and Webull referral link, and when you sign up with Webull, you can get 3 free stocks right now. And check out the free Discord server. Anyone can join that, and hope to see you there. Now let's get into it. So before we get into the positions that I bought into this week, I wanted to let you guys know I do have a few different accounts. I have a growth account that's, mainly focused on tech and, growth stocks. I have a retirement account, and I also have what I call a lockup account, where I just allow myself to buy, but I can't sell for a few years. And it really helps me, not look at daily fluctuations, which sometimes is just the worst thing you can do because you get in your head, you get itchy fingers, and you either want to take profits too early or you just worry about the daily fluctuations, and it can really bother you. So I feel like by having this lockup account, I don't look at it as much, and it just allows me to let companies reach their full potential. So that's my thought behind that. So stock number 1 was purchased in the lockup account, and I have an average cost for $19.69 for Virgin Galactic, and the ticker symbol is SPCE. Now this is an aerospace company. They develop human spaceflight for private individuals and researchers in the United States. They manufacture air and space vehicles. The company's spaceship operations include commercial human spaceflight, flying commercial research, and development payloads into space. In addition, it engages in the design and development, manufacturing of ground and flight testing, and post-flight maintenance of space flight vehicles. Now, this is definitely a speculative play because this company is new and hasn't really proven much yet, but I just wanted to open a small position and let it ride out over the next few years, so that's why I put it in the buy and don't touch account. Virgin Galactic recently opened up their window to launch on 10/22, and I really wanted to scoop some shares up pre-launch because if this goes well, I can see, their stock price increasing pretty nicely. Now, I understand the company has a long way to go, but this is just one of those plays I would rather buy into and lock away and then come back in a few years and see where they're at. Next up on the list is Wynn Resorts, ticker symbol WYNN, and this company operates various resorts all over. And for example, tons of food and beverage outlets and places to shop, retail space, 2 theaters, 3 nightclubs, and a beach club. So they really have everything you could ever want, if we weren't in a pandemic. So I bought some Wynn Resorts because I think the stock is highly undervalued at the moment. And I bought on a nice dip, average cost of $71. I think they will 100% fully recover post-pandemic and when things return to normal. And I'm totally fine holding out and waiting for that to happen. Now, this isn't something I see myself holding forever, at least at the moment. I do like the business though, and I just see an opportunity here because I think post-pandemic this will return to, $100 plus easily. And I bought this in my retirement account just because I could swing trade it tax-free, and that was my thought process behind that. But we'll definitely see how things go. It could end up turning into a long-term hold for me. We'll see. Let me know what you guys think about Wynn Resorts. Third up on the list is Draftkings, ticker symbol DKNG, and I just recently did a video on them, so check that out. But most of you guys know they operate as a digital sports entertainment and gaming company in the United States. The company provides users with daily sports betting, and iGaming opportunities. It is also involved in the design and development of sports betting and casino gaming platforms, online and retail sportsbook, and casino gaming products. I personally think it's oversold and has a lot of future potential growth, and I do understand that COVID has affected sports, and we're approaching winter, so it's kind of like the end of sports seasons, which is why I put them in the don't touch account because I do see this growing nicely in the years to come, even with their competition. I think their name holds a lot of respect and weight, and I'm excited to see them grow. Now, I do currently think it's oversold, like I said, and we will likely get a reversal shortly. However, I'll still be holding because I feel like I got a good deal on this, and my current average cost is $41.72. Fourth up on the list is Lemonade, and that's ticker symbol LMND. And my most recent video is on them, so if you want to know more about them, definitely go check that out. I really think this will be a nice growth play and will grow in the years to come. It was one that I've been watching for a while, and I finally got a nice sell-off and entry point with them. I think in the coming years they will be profitable and prove themselves, and I'm willing to take a risk on a speculative growth play here. I do believe in the short term they will return to the high 50s and low 60s, in the coming weeks and months. I did buy at 53.80 average cost, so obviously I'm down on my position right now, but I will continue to dollar cost average down if they drop below $50. And yeah, I'm pretty happy with my position even though it's down right now. Fifth up on the list is ticker symbol TTCF, and this is the Tattooed Chef. Now this is a recent successful SPAC merger, and I love this company. I welcome the sell-off 100% because I'm very bullish on them, and I just love buying at these prices. The company has, quick and healthy options that people are looking for, and they're very popular right now. And, they have so many different options, and I think they'll continue to add to their variety. They're growing year over year and just set record high revenues, and I just can't wait to see where they grow to. I think they're going to continue to grow with every earnings report and every year to come. They also just released their online ordering, and they are well established in stores like Walmart, Target, and Costco, and probably some more that I'm forgetting. I've been following them for a while since their SPAC FMCI was, first publicly traded, and I've been bullish ever since. This is by far my favorite SPAC and definitely a long-term hold for me, and they are in the locked up account. Now, my average cost for them is $19.98, and that's mainly because I used to have them in my growth account at an average cost around $13 when they were FMCI, and I did swing trade them when FMCI hit $28, and I'm not mad about it. But yeah, I'm happy to lock them up for a while. So sixth up on the list is ticker symbol AMD, and this was bought in the growth account. Now this operates as a semiconductor company worldwide. The company operates in two segments, computing and graphics, and embedded and semi-custom. So I actually played an AMD call option this week and made some profits off of it, but I didn't want to hold it over the weekend just because of all the stimulus and, rough market sentiment. It just didn't sit right with me, so I took my profits and got out. But I wanted to buy some shares because I do think they'll do very well next week on their earnings, and we have a lot of earnings coming up. They do have a great CEO and tons of room to grow still, and they have large competitors, but they're keeping up very well. I'm not sure how long I'm going to hold AMD. I did add them to this growth portfolio, and I don't mind seeing where they go. I just haven't made an exact plan for them. Am I long or short on them? Let me know what you guys think about AMD in the comments though. Last up on the list is Qqqm, which is essentially a less liquid, less expense ratio QQQ. And it's better for the long-term holder, which is what this is for. This is in my retirement account. And QQQ is better for the active traders just because of, how much volume is associated with QQQ. And I did hold QQQ for quite some time, and I will likely sell it off as soon as tech rallies and then just transfer those funds over to Qqqm. I also added Qqqj, which is the next gen tech ETF, and I think this has a lot of potential because these aren't your typical matured tech stocks yet, and I think there's a lot of room to grow over the next 10 to 20 years. They have companies like Okta, Trade Desk, and Roku in there, and I'm just excited to see where it goes over time. Just because Invesco had such great returns with, QQQ, I think they could do it again here. So that's pretty much it. Let me know what you guys think about these picks and what you bought this week. Have a good one. Ice, lemonade, my neck was tripping.